Hey folks, Paul here. Um, just going to do a quick update on the trades I had running from Monday of this week, starting the 20th of August 2018. I was looking for a breakdown out of this order block and sort of stop run level down into this old consolidation highs. And I just used the expectation of that continued breakdown on the US index to drive my bullish analysis on most foreign currency pairs. I've gone over previously, I took a long on the GBP USD or cable. This was Monday's price action in here. We were consolidating into, we'd formed a low, a fractal low. On the hourly and 4 hourly charts the previous week, we'd consolidated. Going in on Monday, I wasn't particularly confident in this, but on a 15-minute chart, we got a nice entry running out Asian lows, and that was what I took the entry on. Was as we ran the Asian, we had an Asian consolidation as we ran the Asian lows into this old level of down movement and consolidation. We bounced out, we consolidated around in here for a long time, and it left me wondering whether maybe I'd done the right thing or the wrong thing. I had a 20 pip stop on this, so stops were down here, and I was just looking to see whether we could get some sort of rally. Obviously it broke higher and kept going. I took my targets up here. It was fairly conservative, upper line of the median line, running into this 2850 potential resistance. I could have actually held on to it. I only got half the move for the week out of the cable, but that netted me 20 pips risk. I got to 96 pips of profit. I took profit slightly early on Tuesday as we rallied up. And I didn't re-enter. That was the only trade I got on cable. So about 4.5 times risk, about 4.5% for me out of that one. Cable yen, I took a long in here. It initially rallied. Took a long, I felt we'd broken down, keyed off of this order block in here. Rallied up, broken down again, come back up. I went long in here. We initially rallied, and I thought I'd timed it perfectly. And then it came right back down, and in hindsight, my stop was far too close. And I got stopped out right before it ripped on Tuesday morning. So I took a 20 pip stop on that. Perhaps should have had my stops, back down below this level here, or could have trailed them up to break even, taken a break even hit and re-entered over here. I was then going to wait diligently and patiently with a lot of discipline for a pullback, which I did. I had to wait through all of this rip. There was not even much of a 15-minute pullback. I was monitoring it, looking. I wanted to get long in here. I wanted to get long off these highs. It eventually pulled back into these highs here, and I got long and took 130 pips out of that. Roughly 128 pips or something out of that for about 20 pips of risk again. And then that profit target was taken off these highs, just looking for a run above these highs. It may keep ripping from here, but it may run up to these areas here. But you can see it's certainly slowed down in its run higher. So I've grabbed a reasonable portion of that move. Would have been nicer to have not got stopped out here and gotten a better portion of it, but it is what it is. I've walked away profitable out of that move for the week. So taken one loss there and one reasonable, really decent profit. Lost 1 times R and made 5 times R. Not 6 times R on that. Euro USD, I also took a loss on this one. Monday, I went long in here at the same time I went long on cable as it broke down. It bounced and then had a deeper breakdown than cable did. Cable consolidated sideways. Euro actually broke down. And as it stopped me out in here, I recognised this order block in here. Just zooming into it because this order block in here, we hit it and rejected it perfectly, and I got long again with stops below this low. Now, because I'd taken one loss on this, a full 1% loss on this, I actually only entered with half a position size on this. So if it kept dropping, I wasn't going to risk more than 1.5% on the overall setup. But on the other hand, if I was correct in my analysis, I wasn't going to miss out completely on the setup. So it covers the fear of missing out, as well as reducing my risk on the trade overall. I was also heavily invested at that time in the market already. I had trades on the pound yen, the pound USD, the USD yen, and the euro yen. So I was invested in across 5 or 6 pairs, so I wasn't going to overdo my risk on it. It ripped. I grabbed 100 pips out of that, or 98 pips, near enough to 100 pips out of that, at about 5 times R. So I made 2.5% on that. Now again, I've actually kind of did myself out of it. Kept on moving. Could have grabbed another 120 pips out of it in total. You know. Maybe if I gunned for this hesitation zone above the, I think that's a small quarter point, 1.15. Could have used that knowledge of the quarters theory to extend these targets higher, or even waited for a break and close below this, whatever MA that is, at 21 MA, and used that to get out up here maybe, which would have again just given me this large quarter point. So that could have netted me a lot more than what I got out of it, but I'm still quite happy with that trade. It was a counter trend trade at the time. At the same time, US index had broken down on the daily level and already hit the consolidation when Euro, wherever my Euro chart's gone, when Euro had broken through this level here. So this breakthrough was at the same time the US index was hitting that consolidation. So those targets were conservative, but again, still 5 times risk, and profitable. So about 2.5% on that overall, which I'd lost 1% here, so I was up 1.5% on the Euro trade. USD JPY. At the time we'd broken back down, we were rallying back up in here into this level here, and I was looking for shorts off that to break this low. So I got short here. Stops weren't there. Stops were initially up here somewhere. It's about it was bigger than that. It was about 25 pip stop I had on it. Stops are up here somewhere. Keep losing me cursor. And I think I grabbed about 55 pips off it. Yeah, 50, 52, 53 pips. 52 pips. So roughly two times risk. 25 pip stop, 50 pip profit. Roughly 2 times risk. And it just moved fairly smoothly and easily in my direction. Again, I left a little bit on the table, but it didn't go a heap further. It dropped a bit, maybe 70 pips, and then bounced, and it's continued to bounce higher. Making higher highs now on the hourly chart and breaking to the upside. So we're either going to go into a longer term consolidation in here, in my opinion, or we're going to break to the upside. USD on the 4 hourly, we've got a low with a higher low and to the right of it, and a higher low to the left of it, which is a fractal sort of swing low formation. Could be an intermediate term low down here. We've broken this swing high now to the upside. If we can close above that, retest, we could look for longs to start breaking these highs, or at least go into a consolidation range between these highs here up at 112.16 and the lows down here. Might consolidate in there for a while. That's maybe jumping the gun. But so yeah, grabbed 50 pips off the Euro Yen, off the USD Yen. Euro Yen was my best trade for the week. We had this similar setup on all the pairs. We had this fractal low formation. We had a low, the higher low to the left of it, higher lows to the right of it. It's a bit clearer on the H4 chart, but I think I went through that earlier in the week. We had this big gun higher on Friday, broke out old lows. We closed, for me, looking at it coming in on Monday, looking at it like this, it was really clearly bullish. We had this low, whoops. This is what we were looking at on Monday. We had the breaking higher. We'd had this big footprint coming in the market, nice big engulfing type bullish candle, looking for a pullback into the origin of that move. It's sort of classic ICT style of order block analysis, coupled with a few other, you could call it supply and demand type strategies, reverse head and shoulders. It all lines up with the same things. There's these quarter points. It's all around the quarter point, the quarter numbers, theory numbers as well, institutional levels, whatever the fuck you want to call it. But it's what I sort of mash together and use, and it seems to work well for me. I went long with a 0.5% risk on one position in Asia, in case it got really bullish in Asia. And I put a pending for the second half position down here at the order block level. You can see it came down, it overshot that trade by 7 pips. It was only ever in 7 pips drawdown on that second entry. So I had 1% risk overall on that position. Targets were 200 pips away at a filling run back up into these lows. Over here, and lines up with the hesitation zone above the small quarter point. I think I'm getting the quarter theory points correct there. I'm not hugely well versed in them, but so those 2 entries got triggered. I think my last update we'd rallied higher. I marked this level out in case we got a pullback to that in here. We didn't. We broke higher again, broke down in New York. I entered a second position on the Euro Yen there. Stops were below this hesitation level and this order block. I mean, it was basically an order block entry off these down candles prior to that move. Come back into it. Again, that just pulled straight up and rallied nicely. We then pulled back into this level here. I trailed stops up to lock in some profit at this point, and we just kept going higher. I was perhaps a bit fortunate in my exit last night. It rallied up really hard into my exit, and I thought maybe I put it too soon. I put my exits targets here and here, just below this hesitation zone, above the small quarter point 127.5, and it rallied up and hit that really nicely. So for a total of 1% risk, actually had a total of 1.5% risk. I only risked 0.5% on this position. I could have gone in a bit heavier because that one took 130 pips for 20 pips of risk. 19 pips at risk if you want to be technical, but 20 pips at risk. So that was 6 times R. These two were 10 times R. So, I mean, I classify these two as one position overall. In my breakdown, I call that one position. I know I've got 2 entries there, but they were in the same idea. This is the second position on the same trade. So. A total of 16 times R out of this trade is really for very low drawdown. It's the crowning glory of my week. It's really exciting and cool to catch moves like this when you catch 90% of of the potential week's move, and you do that once every now and again, 16 times risk. Euro yen I've done really well off. I got the short down here and I've got the longs here, so it's been really kind to me of late. Maybe better back off and done my luck on this one, but consolidating in here, it may well punch higher into these lows yet, or maybe left saying I got out too early. I don't think so. I'm very, very happy with 16 times R on the Euro yen, and that's so to go into a summary of that at GBP USD. One win 96 pips, GBP JPY one loss at 20 pips, 1 times R. One win at 130 pips, 4 times R. Euro USD, 1 loss at 20 pips, and 1 win at 100, 5 times R. US yen, 1 win at 55, 2 times R. And the Euro yen, 2 wins, 200 pips, and 130 pips, 10 times R and 6 times R. 8 trades closed, 2 losses, 6 wins, and 29 times R net. For the week is a fantastic week going into Thursday's morning of Thursday. And I netted plus 20% roughly out of that for myself. If I'd gone in with 1% risk on every trade, I could have netted 29%. But my risk management rules I followed. I felt I was very disciplined in my trading this week, really happy with that. I didn't jump in and try and grab more of this cable long setups and Euro USD long setups that I perhaps pulled out of a bit early. In hindsight, I could have even done even better. I could have grabbed a total of 200 pips out of both the Euro USD and the GBP USD. But I didn't chase it. I was happy with what I got out of it, and for fairly low risk trading week, I've netted quite a decent result. And the idea of this is not to stand here and boast about my results really, but I want to try and give people some confidence going in that just using some simple support and resistance ideas, coupled with it all starts out with analysis on the daily charts, whether you use the US index like I do, or whether you just do your analysis on the cable, say on the daily chart. You could have arrived at similar results seeing this swing low having formed on Friday and expecting continued upside from that pullback. Could have given you the Euro USD, we'd formed this pin bar and turned around, so then to expect a pullback into the bullish order block and rally. That was all my Euro trade was based on, was a pullback into this level and a rally. That's really simple support and resistance type trading, and in markets like these that we've got going at the moment, you can get some good type risk reward. So hopefully it gives someone some inspiration to go in and study these types of moves in the market. You tend to miss a lot when you're first starting, and over time, if you study it as it happens and you mark your charts up with the levels you're looking for, these caudal theory lines I think can be really useful as well if you base your trades around those. Don't mess your charts up, in my opinion, with too many indicators. Keep it as simple as possible. Price gives you the best, is the best leading indicator you can get. You can use some diagonal trend lines, which I use occasionally in the median lines and that, to give me some ideas on diagonal support and resistance. Had this median line running on the daily chart for a while. Yeah, get in, study, and hopefully start seeing some good results yourselves. Good luck and good trading.